What if I told you a liar found a secret phrase buried in the fine print of million-dollar contracts that let him legally steal from the biggest insurance companies in America? This isn't a movie plot. This is the insane true story of Joseph Caramadra, a man who turned a single sentence into a perfect can't-lose fortune. Until that one sentence landed him in federal prison. Stick around, because by the end of this video, you're going to learn how he did it, why the insurance companies were absolutely furious but powerless to stop him, and the one critical mistake that finally brought him down. This is a masterclass in reading the fine print. Our story begins with our main character, Joseph Caramadra. He wasn't a Wall Street wolf. He was a lawyer and accountant from Rhode Island who had a superpower, an obsession with finding loopholes. We're talking about a guy who figured out how to get free office furniture for life using coupon loopholes. But his magnum opus, his masterpiece, was in variable annuities. Now, stay with me, because this is where it gets fascinating. Variable annuities are these complex investment products with a special guarantee, a death benefit. Basically, if the market crashes and you die, your family gets your original investment back. It's a safety net. The insurance companies sold millions of these, assuming one thing, that you would buy one on your own life. But Joseph did something nobody else did. He actually read the entire contract. And he found a bombshell. For centuries, if you bought life insurance on someone, you had to prove an insurable interest, a real reason to care if they live or die, like they're your spouse or business partner. It stops you from taking out a policy on a random stranger. But when these companies created variable annuities, they left that requirement out. It wasn't in the fine print, so Joseph asked a revolutionary question. What if I, an investor, buy a variable annuity, but use a complete stranger as the person whose life it's based on? And not just any stranger. What if I used a terminally ill stranger? Think about it. He invests $100,000. If the stock market goes up, he makes money. If the stock market crashes, it doesn't matter, because when the terminally ill person passes away, the death benefit clause triggers, and the insurance company is legally forced to give him his entire $100,000 back. It was a perfect risk-free investment, a literal cheat code. He called it his creation, and he made millions. The insurance companies were livid but helpless. They took him to court, and guess what? The judge kept ruling in HI's favor, saying, "It's a bit ironic for plaintiffs to suggest that they did not know the true nature of contracts that they themselves drafted." He was playing by their rules, and he was winning. But this is where the story takes a dark turn. To make this work, Joseph needed people who were dying. He would offer them, or their families, a few $1,000s for their cooperation. He said it was charity, a final gift. The government called it fraud. They argued he tricked these vulnerable people, that he forged signatures, that he lied about what they were signing. The very thing that made his scheme legally brilliant, the fine print, was also what made it morally gray. And that moral gray area is where the FBI finally caught him. He was charged with identity theft, conspiracy, and fraud. The man who beat the insurance giants in civil court eventually pleaded guilty in criminal court. So, what's the takeaway from this insane story? 1. The power of reading. Joseph Caramadra's entire fortune was built because he was the only one who bothered. to read the entire contract. This applies to your credit card agreements, your apartment lease, your car loan. The fine print holds immense power too. The line between clever and criminal. He operated in a loophole, but the method of recruiting people crossed, a line that turned a clever exploit into a federal crime. 3. Companies assume you won't read. This entire arms race of insurance offers happened because companies assumed no one would ever use their product this way. They got lazy with their own fine print. If you're fascinated by stories like this, stories of high-stakes finance, incredible loopholes, and the psychology of money, you are in the right place. We break down stories like this every single week. Next week, we're diving into the story of a guy who hacked the McDonald's monopoly game and stole millions. It's even crazier than it sounds. If you don't want to miss that, make sure you hit that subscribe button and ring the bell. It's the best way to get every single story. This is just part 1 of our Financial Heists series. Subscribe so you don't miss part 2, where we cover the greatest casino hack in history. So, the next time you're about to blindly click "I agree" on a terms of service, just remember the lawyer who read it all and made millions. It might be the most valuable minute you ever spend. Thanks for watching. I'll see you in the next video.